Markets are down on the day, with the S&P TSX falling 1.37%, making it a month loss of over 6%. Now this begs the question, with stocks continuing to fall and not really rebounding so much from that low, are we entering a recession? With all the coronavirus issues and economic growth issues coming this year, could this possibly be the year for a recession? I think there is a decent chance with that when you consider that the US is in their longest expansion ever, as well as Canada has had a pretty long expansion as well. Overall, it's hard to say or hard to know, but this could be the triggering point. The S&P 500 had a really rough day, falling 3.4%, making it a month loss of 9.3%. The Dow also had a pretty big fall, falling 3.58%, making it a month loss of almost 11%. The Nasdaq was down 3.1%, making a month loss of 8.1%. The FTSE fell 1.62% on the day, and the Nikkei actually rose on the day, rising 1.09%. While oil went up the past few days, it fell again, dropping 2.12%. Gold, though, is continuing to do strong, up at that 1675 mark, and went up about 2% on the day. Rates continue to fall, with the U.S. Treasury's 10-year yield being at 0.92%, which is the lowest on record. Even if you look at lower yields, like the 12-month, it's at less than 0.5%. Canada's yields have also fallen, with the 10-year falling to 0.85%. Now, what really concerns me about this is that the yields keep dropping. As you can see, there's slight inversions in the US and there's inverted yield curve in Canada. And overall, with the rate drops that just happened, you'd hope that would kind of move away. I mean, it might still, but overall, this could show that we're possibly moving into a recession. Hard to say, but I'd watch out for that, especially with the way stocks have been forming and have dropped recently. We also still don't know what effects the coronavirus will have, as many things are getting canceled in the United States, as infections are increasing in New York, and as well as California just announced a state of emergency over the issues. So hard to know what the economic impact will be, but it'll definitely hit. Looking at currencies, the Japanese yen continues to increase, as well as the euro. The British pound also had a decent day. But on the downside, the Australian dollar had a rough day, as well as the Canadian dollar. As the Canadian dollar continues to fall, it's currently at 74.53 cents versus the US dollar. On Wednesday, the Bank of Canada followed the US Federal Reserve's decision to cut rates, as the Bank in Canada cut its key interest rates, the overnight rate, by 50 basis points. This brings the overnight rate down to 1.25%, previously at 1.75%. They're the second central bank, notably, to have decreased rates by this amount to combat the economic problems that are arising from the coronavirus. In Toronto, the housing market continues to accelerate and get hotter and hotter, as the housing prices increased 10.2% in February to an average price of $846,000. This is a 2.2% increase since January and is a pretty significant increase overall. The number of transactions jumped 46%, and total sales were up 15% versus January. Overall, looking at detached homes, the average price increased 8.1% in central Toronto, and condo price downtown increased 11%. New listings rose 7.9% over the year, and they expect a 10% price growth in 2020. Overall, the housing market in Toronto has been pretty strong over the past years, especially when you consider the rate cut that Bank of Canada just did, that this could also heat up the market as well with those lower rates. Overall, it would be interesting to watch to see how pricey this market can get, as many are concerned that it's causing a bubble and might pop. The US productivity numbers revision came out at 1.2%, which is slightly down than the 1.4% that happened previously. Overall, though, for 2019, productivity was up 1.9%, which is the best showing in nearly a decade. Overall, though, productivity is a decent number, as you can't expect it to go much by recent trends. But on the upside as well, There's a small decrease in jobless claims, about a 3,000 drop. It's not too significant, so it'll be interesting to see what the job numbers come out on Friday. The effects of the virus on the world continue to have impact as OPEC are now planning on cutting production by 1.5 million. Overall, the member countries are planning on cutting it by 1 million and non-member countries are at 1.5 million. This comes before their meeting tomorrow as they hope to increase prices. It is unsure though if Russia will agree to this as they are kind of reluctant to lower prices and slow production down. In company news, there's a lot going on with quarterly earnings in the Canadian energy sector. Starting with TransAlta, they had a profit of 66 million, which is decent for this quarter compared to last year's negative 122 million, making an earnings per share of 24 cents compared at negative 43 cents previous year. Although revenue was down on the quarter at 609 million, down from 622 the previous year. What is a little concerning though is their funds from operations, as it only totaled 67 cents per share, while a year ago was actually up at 76 cents. For the full year though, they only had profits of 18 cents per share compared to last year's 86% per share. So it is better year over year, and revenue did increase slightly over the year, but a lot of that profit, pretty much basically all the profit came from this last quarter, and the past 3 quarters, I can assume, didn't amount to much. Up next, we got MEG Energy. Now in this quarter, they also achieved a profit of 26 million compared with the similar loss past year of 199 million. Revenue took a significant increase up to 992 million, which is up from 520 the previous year. Overall, production had a significant increase, which increased that revenue and that profit, an overall decent quarter for MEG. Finally, we got Canadian Natural Resources. They reported their fourth quarter earnings, and they achieved an earnings per share of 50 cents versus a loss of 64 cents per share in the previous year. Overall, you can see with all these companies, they did turn it around this year, as all of them in the previous year had losses. On an adjusted basis, though, they achieved an earnings per share of 58 cents versus last year's negative 21 cents. Though unfortunately, they did miss analyst expectations of 70 cents per share. Overall, though, they also increased their production about 7%. In the cannabis sector, in the new world of legal weed in Canada, there has been some layoffs, with Canopy Growth laying off 500 people and planning to shut down 2 BC facilities. Overall, the reason for this is that there is more supply than there is demand. As with what's happened in the US and places like Colorado, there is a decent amount of black market still going on, as a lot of people find what they can get outside of the government is better and cheaper, and overall isn't looking too good for the companies. This was kind of expected if you followed the news around the time of the release, as many companies were getting to crazy valuations, expected crazy growth, and somehow they're going to have to deal with it with some companies closing down or many companies de-escalating their size. Overall, though, there is a few other companies that made some cuts, like Tilray.